Hello everybody, welcome. I'm Dr.Charles Kim, Professor and the CEO of European Prestamo Group Company in Frankfurt, Brussels, Amsterdam, London, Paris, New York, Montreal, Chicago, Sydney, Hong Kong, Shenzhen, Shanghai, Beijing, Wuhan, Xi'an, Shenyang, Zhengzhou, Singapore, Bangkok, Jakarta, Dubai, Mumbai, Abu Dhabi, Istanbul, Muscat, Qatar, Doha, Tokyo, Seoul. Welcome everybody. Today is our tutoring courseware. Number one is already I did one is the on-ledger financial market and off-ledger financial market. Off-ledger financial market already done it first time. And maybe if you demand for the knowledge for the off-ledger financial market, welcome to enroll in our curriculum tutoring courseware. And the second is the financial market is off-ledger financial market and on-ledger financial market. On-ledger financial market is the hierarchically classification techniques is international financial market and local financial market. International financial market and local financial market is the system is the same. International financial market is direct financial market, indirect financial market. International direct financial market of the short-term financial market, long-term financial market, foreign exchange market, derivative market. Long-term financial market, international long-term financial market is the international call market, international repurchase market, and international CD market, international asset-backed CP market. Asset-backed CP market. CP market is the non-asset-backed CP market. This is a credit-backed CP market. And asset-backed commercial paper market. And number 5 is the short-term financial market inside of international asset-backed short-term bond market. This is 5 market is the short-term financial market. Is the MMF money market. Long-term financial market is the simple one. International stock market, international stock market is the through the maybe over there too much kind of the New York stock market, Shanghai stock market, Tokyo stock market, Hong Kong stock market, Hong Kong Hang Seng stock market, Dubai stock market. This is a stock market. And the bond market is the same. Bond is the stock market is the trade exchange market and over-the-counter market too. Bond market is the same, similar is the same. And but the other over there, the now is the derivative market together. And also the number 3 is the international long-term financial market inside of international treasury inflation protector market. This is the some countries say this is the monetary currency stabilization market. Inflation protector market is the monetary currency stabilization market. Same, it's meaning same. This is the normally speaking, and also the long-term financial market, and another is another kind of the securitization market. Securitization market through the underwriter, direct securitization, and through the underwriter securitization, direct and indirect securitization. This is the normally is the long-term financial market. This is capital market. How to do raising of capital through the like this 4 kind of market: stock market, bond market, and this is special one, treasury inflation protect security market, and also the securitization market. This is the direct market, and also the direct market over there. This is a very key market. Key market. Securitization market. Four kind is the stock bond, the stabilization, and securitization. This market. And the foreign exchange market. Foreign exchange market, you know very well. Each country there is the foreign exchange, over the counter and the black market, you know, over the counter market and black market, and the trade market, trade exchange market. Trade exchange market, if you come there, maybe the buying and the sales through the bank trade exchange, or the otherwise you can trade exchange of the other. Maybe you can open account and also trading exchange, and also another is the derivative market too, foreign exchange too. This is technique. This is the direct, direct foreign exchange market, direct market, and also the indirect, direct market and the indirect market. Indirect market, normal speaking over there, indirect market, the saving and loan market. This is banking market. Banking market, fund market. Fund is the fundraising and over there, fund market. And insurance market and the trust market. Today is we can concentrate to the indirect financial market. Indirect financial market is like this. Saving market and the loan market. Saving market is there is many kind of but in here is a loan product market. There is saving product too much kind, but the other simple one over there. You understand? Three kind of there. Maybe demand deposit, accrued deposit, periodic time deposit. Three, but the other there is many kind of product over there. Derivative there. Loan market is the primary financial market, secondary financial market, third financial market. And the special financial market, maybe central bank and the development bank, Exim Bank, national bank, housing bank, they have another kind of the financial market. Number one is a Moguiji loan market. Loan market is important one. Moguiji loan and the pledge loan. Moguiji loan is the what you call is a fixed asset. Moguiji and Moguiji loan, and the pledge loan. Pledge loan is the swing loan. Pledge loan, swing loan, bridge loan. Gap financing over there, and the real right guaranteed by way of the security, real right of the guaranteed by way of security. This is DN right. This is DN. Pledge right is a pledger and the pledgee. Pledger and the pledgee. You understand? DN and the DNE. DN and the DNE. Pledger and the pledgee. A little different one, and the Moguiji right. Moguiji right is the fixed right. Moguijo and the Moguiji, different one. And the collateral pledger. Normally the collateral security and the collateral pledger, quite a different one. Maybe if you can't understand, no problem. You can register enroll in our tutoring courseware. And the user practically writer. User practically writer normally is the surface right, easement, leasehold writer. These three kind, you remember. And the amount of work complete, construction complete amount. This is the whenever you pay contract, maybe the project contract. And the project developer and the project advisor will pay for the money is in terms of amount of work completed. Credit loan market is a personal credit loan market, corporate credit loan market, personal, corporate, and the government credit loan market. Different one. And the project financing, recourse loan, non-recourse loan, limited recourse loan, government credit loan over there too. Already told it to you. And the stock nearly a contract pledging of a policy. This is you need to understand. And the bridge loan you need to understand. Bridge loan is normally one kind is the bridge loan. whenever I will buy up the house. In this case, is I borrow small money, the short-term loan, and pay, and also I can Moguiji 30 years, maybe maximum 30 years loan, like this. And another is the bridge loan, the company, it's a corporate loan, small, maybe is the now is the I'm shortage of small money, maybe total 1 billion, but shortage of 50 million. 50 million is the I will borrow and put in over there, and also main loan arrive here, I can return. This is the kind of bridge loan. This is gap financing and the swing loan. What do you call it? Gap financing and swing loan. And another is the institutional investor and the banker. They will buy and they will some get a loan, is call loan and call money. There's a 30-day, 5-day, 30-day. Is a high pay for the high interest rate. In here, gap financing and swing loan is same meaning. And the fund market second. This is just before is the indirect financial market of the structure of the saving and the loan market. But over there, too much kind of the big science over there. But next time is I can lecturing to you is the separator. Today is only structure and the system of the indirect financial market. Fund market. Number one is saving and loan market. Fund market. Fund is a very big fund. Fund is the projected fund and blinded fund. Depend on the scope of the investor. Fundraising target for the general private equity fund. You understand? General equity fund. But the fundraising system is there is many kinds. The fund is the two way. One is through the public offer. Through the public offer. Number one is the initial public offer. Second is the follow-on public offer. This is the public side. But public side is every country they have a commercial code, and another is the fund related code and law. You can check it how to do. And this is through the public offer. Another is through the private placement program. This is a private placement program. Just before I said, depend on the scope of the investor, the fundraising target for the general private equity fund. General equity fund. General equity fund is through the private placement program. But some countries in USA is the up to 1990 investor. You understand? But I have a good project. You understand? In this case, I can raising of fund. And private equity fund is two kind. Another is one is the hedge fund sector. Another is the normal private equity fund. Private equity fund is like this two kind. Hedge fund and the private equity fund. Private equity fund is separate two kind. One is the micro management angel fund. Another is the share participant fund. You understand? This is separate one. Stock participant only, share participant only. We cannot interfere in your management. Number one is if you maybe let us invest of money to this project, we will dispatch it to our management team. This is a micro. Micro is the one by one, everything is checked. You understand? Micro management. The angel fund. This case is you seek this is and likewise angel pays, but the other heart is calculate everything, because we already dispatch of the chairman of the board of director. Total 7 board of director of this corporation, but we are already 5 board of director we dispatch. Because of that, we can micromanagement, not macromanagement. But another way is the share participant fund. This is only we no need to dispatch anybody. Okay, we trust you and your technology and your management team. You understand? Only we can take share in the 10%, 15% of your group. General investor, professional investor, institutional investor. Investor is here different one. Whenever we are raising up private equity fund, private equity fund is the maybe hedge fund, and also the another is the just if I said normal private equity fund is the target is different. Private equity raising target of institutional investor. This is a pension fund management institution. This is the institutional investor and the special purpose fund manager institution and the financial institution. Financial institution inside of the bank, the security company. The security company and the security bank, the investment bank is different. You understand? Security company, they can only buy and selling to for the bond, stock, maybe SKR like this bank instrument. This is the security company. You understand? The maybe investment banker, they can do this business, inclusive of the we can provide of financing. You understand? If you demand for the big amount of loan, maybe if you are an institutional investor, maybe Saudi Arabia National Wealth Fund, you understand? They have maybe 12 trillion. In this case, you have enough to money, but our the JP Morgan, okay, we can combination with you, we can much more provider and project loan and the investment loan to you, short-term loan, long-term loan to you. Like this JP Morgan is like this. This is the investment bank. Understand? Investment bank is they can do business, their own capital. You understand? And also somebody deposit capital. There is two capital. Their own capital. This is a appropriate investment. This is direct investment. Another is the indirect investment. Just if I said of the in here fund, now is we are talking fund. Somebody is the buyer of fund product and also money in JP Morgan account. JP Morgan is this is indirect investor to the maybe diamond project. You understand? Diamond project in Saudi Arabia. Understand? This is the security company and investment banker. Different. Commercial bank is different one. And the insurance company too. Insurance company, trust company. They are the fundraising model. Initial public offer. And the first time is the initial public offer. And the public offering fund cannot invest more than 10% of the fund on the stock. This is different one. You understand? Different one. And also security, such as bond other than stock, cannot be invested more than 10% in one stock. You understand? Maximum 10%. And also this is the initial one. Initial fund through the fundraising through the IPO, and also the follow-on public offer. This is the FPO, IPO, FPO. You understand? Many times they can do, but there is many kind of technology, and maybe you are fundraising 1 billion and your account. But you can contact to the investment bank together. Investment will give you maximum 400% of loan too. Now is this money is deposit. Deposit what? The margin. You need to study of what is margin and open account to JP Morgan, and my fund is here, and JP Morgan will give you the 4 billion. You understand? Your margin is 1 billion and 4 billion. And then this 4 billion is you can put into the maybe long, short derivative, futures, maybe forward futures, option, swap deal. You understand what I mean? This is the other you can do. Because the fund of fund. You understand? Hedge fund of fund. Some fund is the other put into hedge fund, but hedge fund is put into the fund too. Hedge fund sometimes is the other account inside of money. They have no projector. In this case is the other fund of hedge fund. Maybe the some fund is the hedge fund is good. Hedge fund is not. A shortage of some money. This project is maybe 20 billion, but this hedge fund only 15 billion. 5 billion not enough. In this case, our fund put in over there. This is the fund of hedge fund of fund. Our fund is put in hedge fund. Like this. Private placement program, investment target by raising fund from the small number of investors. Small number is the maximum 49 in Korea, maybe USA is 99, different one. In a private equity manager, private equity manager, you understand? And since there is no restriction on investment target, proportion of investment, fund that can freely invest in stock, bond, real estate. Real estate is the different one. It's the maybe different one. And raw material, etc. Hedge fund. Hedge fund. What do you mean exactly? Hedge fund is like this. There is many meaning. The big science. Hedge fund. The next time is maybe we can lecturing to you minimum 6 hours and did relating P. Understand? And the fund management service fee. Fund management service fee is very expensive, you understand? 1% to 3%, normally 2% per year. Maybe if you control over the 10 billion, 2% is big amount, you understand? 200 million. Carry the interest within 20%. Hedge fund, normally speaking, maybe like this. You can manage asset manager of a hedge fund. You put into the 1 billion from the hedge fund account and investor, and you can maybe the return rate per year 20%. 20%. 1 billion 20% is 200 million. You can make profit. You understand? In this case, the fund owner, you understand? This fund investor agreed to you can take out of the maybe 10 billion, 1 billion of the 20%, 200 million. You understand? This is hedge fund. Private equity fund. Private equity fund, I already told you, there is two kinds of fund. Micro management angel fund. The incubating fund, angel fund, venture capital fund, M&A fund, spin out fund, spin off fund, curve out fund, restructuring fund. This equity participating fund. This is equity participating fund is the only maximum 40% they can do it. But there is the country by country is different. Maybe if you equity participating fund, total this company of the 40% you can take shareholder. But normally is the after that 10%, you understand? 10% how to do is the loan and how to do because this is the big science too. And the limited partnership. Limited partnership pension management institution, special purpose fund management institution, national wealth fund managing institution, bank star. This is limited partnership kind. Bank star and the security corporation, insurance corporation, fund corporation, trust corporation, fund manager, R&D limited partnership. This is special one. This is common sense. You can study of yourself. And research and develop a limited partnership. in this case, government, maybe this is through the constraint financial program of the government authority. Government no money, understand? But government have a very good project. Government should develop this project. In this case, the government give you the good policy. You can fundraising, although you have no fundraising license, but in this case, especially give you or temporarily give you maybe 1 year, 2 years, 6 months, and then you can, this money you cannot touch, put into the project, build up project, and this BOT maybe is the ownership is the transfer into government. You understand? Transfer into the government, and then PTO operating, you can operating maybe 30 years operating, 50 years operating this project, and you can return money, and already ownership is transferred into the government, the competent minister. After maybe 30 years, maybe 50 years, government directly management this project. This is the R&D project. Especially is next time R&D project is what kind of project you can take advantage of from your government. I can explain to you if you enroll in our curriculum tutoring courseware. General partnership. General partnership is our company, our group company. We can link with many the limited partnership. Just if I said limited partnership, they have big amount of money. We are a asset manager. They may be the 5 billion keepers. We can put into project, and we can this asset management on behalf of the limited partnership. Saudi Arabia Wealth Fund, Abu Dhabi National Wealth Fund, like this one. OPEC fund. You understand? This is one. Private equity fund raising investment banker. This is there is money over there already. Because of that is the private equity fund. Within 40, maybe five partnership, 6 partnership in Thailand project. Okay, we can bring up money from the loyal maybe wealth fund, like this one. And the fundraiser, security financial planner, insurance financial planner, derivative financial planner, private equity fund investment manager, project planner, project financial planner. Private equity fund is a project fund, blind fund. There are 2 kinds of fund. Project fund is already, there is feasibility study and the license, government approval sheet, accreditation, everything is ready. In this case, we can do one way is the government. Okay, this is the BTO project, BOOT project. You should do through the IPO or FPO, FPO. This is government rule. Okay, we can do through the government rule and prepare, and also we can maybe open international competitive tendering. You understand? Tendering is I already told you many kind of tendering. Next time explain to you government tendering way. Another is blind fund. Blind fund is some maybe George Soros like this is hedge fund. They demand for the big amount every year because of they through the maybe IPO. You understand? Through the IPO or through the maybe the PPP, and also they can contact to the several big the institutional investor. You understand? Institutional investor, maybe USA is the pension fund number 401 like this fund. Okay, they can put into maybe 10 billion. You understand? 10 billion. This is the 10 billion, but this money is we cannot use. We are now is a non-raising fund, but we have partnership. If we demand, you can put into our account. You understand? In this case, blind funding. First of all, no project, but money fundraising first. Fundraising is cannot put into my account because as soon as fund is deposit into your account from that day. Fund manager, you understand, and the general partnership, they should pay back of the interest, understand, in term of fund contract. And the fund kind is the security fund. This is important one. Security type, security manner fund. In this case, stock fund and equity fund is 60% security fund. Fund kind. Maybe you are raising up a fund. You should this is the security fund, securities fund. In this case, government stamp license security fund. But this fund is 60%. Minimum 60% they should put into the buy and sell of a security fund. And mixed stock fund. Mixed stock fund is 60% stock, but the security fund. Security fund, what do you mean? What do you mean? Mixed stock fund. Mixed stock fund is the same. This fund maybe if you raising up for the 1 billion, 600 million, you should buy and selling of the stock and bond. The bond fund is only you can 60%, maybe 600 million, only you can sell and buying of bond and make money and return to your client. Mixed bond fund, same. Mixed bond fund, same. There's many kind of bond they can save, government bond and corporate bond too. Indirect fund. Indirect fund is direct fund is just if I said like this direct fund. Indirect fund is the fund of fund. There's many small fund put into the my fund account, and we can put into project fund. This is indirect fund. Money market fund. Money market fund is short-term fund. Short-term fund is within 1 year. This is the normal speaking money market fund, short-term like fund. Real estate fund. Real estate fund is the rich fund. Rich fund. And the real fund. Real fund is like this. This fund is they can buy directly by gold. You understand? Directly by gold. Gold maybe bullion and put into bank. And they are waiting for the London LVMA price is creeping up. You understand? Maybe the creeping down, they can lose big amount of money. And maybe they can buy up the copper, silver, agriculture, maybe fishery stock. They can buy. This is the not buy stock and bond security. This is the real physical one, buy and sell. This is a real fund. Special asset fund. Special asset fund is like this. Now is the maybe in China they have set up the big airline company. They cover up the local Chinese airline, air route, and also international air route. In this case, they can demand for the 10 billion US dollar. And this shipping company same, understand? And also the other, this fund is the put into the maybe this lease fund. Lease they can put into there, and lease and also operating and management of the airline. This is lease airline and oil tanker and shipping company same. They cannot buy directly buy of the big amount of this one. This is the leasing company. Leasing company is two way. One way is the finance leasing and operate leasing. Operate leasing. The finance leasing is the ownership. You understand? And aviation and shipping tanker like this. This heavy equipment. Ownership is will give you. Understand? Owner. And then we can buy. We are a investment. This fund put into and also the leasing to you. But owner is the ownership is to you. This is a finance lease, and operating lease. Ownership is belong to our lease company, lease corporation, and also we can lease it to you. But in this case, you can compare each other data. You understand? Which one is good? But the maybe the finance leasing, maybe lease is the finished maturity data. In this case, they want to directly, this is a big amount of asset operating the problem. In this case, they can sell. This is a sell to the leasing company. Leasing company have a big amount of money. A big amount of money. In this case, leasing company is okay, no problem. We will buy and lease back to you. This is the three type of the normally lease one. And the mixed asset fund. This is mixed asset fund, several kind of asset fund. And the offshore fund and the onshore fund. Offshore fund and the local fund and international fund. Open-end fund and the closed-end fund. This is the normal one. And the mutual fund, hedge fund, fund of hedge fund. Sometimes hedge fund have enough money, but this is blind fund money. Blind fund money is they seeking for the hunting for the very good project. In this case of our fund is not enough. Okay, hedge fund come here, put in over there, project together, make a solution. You understand? It's a fund of fund. Fund of fund is the same. The small fund, maybe 5 billion, 10 billion over there. Now we are demand for the 25 billion. You understand? This case is the I'm mother fund. This is son fund. We are gathering up some fund and put into mother fund. Mother fund is the put into project. Exchange trade fund. Fund is sometimes is through the exchange trade fund and trade fund index. They can sell and buy. Stock trade fund, exchange trade fund, bond trade fund, private equity fund. This is the fund market. Trust market is the now trust market and also the insurance market. Trust market is the how to do classify into the trust market. Is indirect market of the trust market of the indirect market. Tripartite relationship. Trust is the normal speaking is the composed of three party. Some is two party, but normally speaking is three party. Three party is the trustor, trustee, beneficiary. You understand? This is the tripartite relationship. Financial management function. This is the trust company is the help for on behalf of you working is a financial management and the separation management. Trust company, they have many trusted assets over there, but they separate. Your trust is belong to the here, your trust is belong to this project, like this one. But normally the trust asset is big amount. In this case is okay, your project is maybe 5 billion trust. Okay, we can issue up a beneficiary, and also your asset is maybe put into the bank of Moguiji, or maybe another one, and also otherwise this beneficiary certificate, you can pledge of this beneficiary certificate in your bank, and you can borrow money and put into your project. This is separation management and the performance in dividend payout principle. This is meaning that like this. Your asset here, 5 billion. This is for instance, but this years we have no touch with your asset. In this case, no result, no profit. We cannot take responsible, dividend to you. This is a performance dividend payout principle. This is principle one. And bona fide duty. This is normally 5 principle. And number one is the kind, is a public interest trust and private interest trust, self-interest trust and other interest trust, lifetime trust and will trust. Lifetime is whenever I trust, this asset is whenever in my active life trust, and will trust it. After die, you can execute this trust is the asset is trust into the trust company. You understand? But I will later already is put into trust company. trust company of the lawyer will do it this one. My son, my daughter is impossible to touch this asset, but they can be beneficiary of this asset only. Because of that, my asset and maybe real estate is the ownership is transferred into the trust company. The business trust and the non-business trust, and the management trust and the disposal trust, establishment trust and random trust, and the legal trust and presumption trust, active trust and manual trust, general trust and special trust, collective trust and individual trust, legal trust and illegal trust, declaration trust and contract trust, irrevocable trust and revocable trust. One trust is cannot maybe revocable, cancel. Revocable is mean cancel. And the individual trust and the corporate trust, personal trust, company trust, trust of object, the money trust and chattel trust. Chattel is meaning that immobilian asset. Security trust, trust in the monetary claim. Monetary claim is the maybe credit asset trust. And the real escalator asset trust, surface right trust, leasehold right trust, trust in the right to lease lender. Insurance market, public insurance and private insurance, commercial insurance and mutual insurance, personal insurance and property insurance, personal insurance and non-life insurance, non-life insurance and flat rate insurance, land, marine, aviation insurance, individual and collective insurance, original insurance and reinsurance. This is insurance, okay? This is the saving and the loan market and bond market, trust market, insurance market. This is indirect market. Thank you very much. Next time is I can continue to the derivative market. Thank you. See you.